Welcome to Informed Investor. Another IPO opens for subscription today, and it is a leading stationery manufacturer, DOMS Industries. In this video, we will discuss about the business model of DOMS and the industry it operates in, followed by the financials of the company and lastly the valuation. So let's begin. So first up, let's understand the business model of DOMS. While the company was formed 4 decades ago in the name of RR Industries by the founders, it launched its flagship brand called DOMS in 2005. Basically, DOMS is a stationery and art product company engaged in designing, manufacturing and selling a wide range of these products. Apart from the flagship brand DOMS, it also has other brands including C3, Amariz and Fixie Fix. The product mix consists of stationery items and art products like pencils, color paints, paper stationery, writing instruments, office supplies, art and craft materials, etc. Let's look at the IPO details. The IPO opens for subscription today and closes on December 15, 2023. It has a fixed price band of 750 to 790 rupees per share. So, for a retail investor, the minimum lot size would be 18 shares, translating to a minimum investment of 14,220 rupees. DOMS plans to raise 1200 crores from the public, out of which 70% of the issue would be an offer for sale, which means the existing promoters and shareholders are selling off shares, while the rest 30% of the issue will be a fresh issue, which the company will utilize for its business. The IPO has the following reservations: 45% for anchor investors, followed by 30% for qualified institutional buyers, 15% for non-institutional buyers, and lastly the retail quota of just 10% for retail investors. So what are the objectives of this issue? The primary reasons of the IPO are to raise funds towards partly financing of the establishment of a new manufacturing facility, thereby expanding production. Second is for general corporate purposes. The Indian stationery and art materials market has exhibited continuous growth over the past years. The market witnessed a substantial dip in sales in fiscal year 21 due to COVID, as schools and offices were closed and shifted to an online mode. However, the market grew a staggering 35% in fiscal year 22 due to a revival in demand after schools, colleges and offices reopened. The Indian stationery and arts materials market is expected to grow at a CAGR of 13% during fiscal year 23 to 28 period and reach a market value of 71,600 crores by fiscal year 28. Now coming to the financials, after a dip in sales during the COVID outbreak, the company quickly regained and made a strong comeback. The revenue grew consistently and recorded 1,211 crore in fiscal year 23, an increase of 77% from the previous year. And if we look at the first 6 months of the fiscal year, it witnessed a massive 761 crore of revenue, even beating the revenue it achieved for the full year of fiscal year 2022. The highlight is that the company maintains a healthy gross margin upwards of 37%, which basically means that 37% of business revenue is left over after the deduction of direct costs such as labor and raw materials. When looked at the bottom line, the company made a loss of 6 crores in fiscal year 21 due to the pandemic, but soon recovered and posted 102 crores of profit in fiscal year 2023. In the first 6 months, it's already reached an impressive 73 crore, showing a strong trajectory for the second half of the year. For fiscal year 23, PAT margin came in at 8.5%, while ROE and ROE saw healthy rates of 33.5 and 33.3% respectively. When looked at the valuation of the company as compared to its peers, based on the upper price band of 790 rupees per share, the price to earnings ratio of DOMS Industries is at 43 times, whereas the average industry PE stands at 36 times. Now coming to our last segment, which is strengths and weaknesses. First up, it is the market leader in the Indian stationery and art material industry with a market share of 12% as of fiscal 23. Moreover, it has a market share of 29% in pencils and 30% in mathematical instrument boxes. Secondly, it has an extensive product portfolio. It offers over 3,800 distinguishable products as of September 30, 2023. Third is its strategic partnership with Fila, a leading global stationery manufacturer which provides it access to international markets and positions the company to capitalize on emerging global trends. Now coming to weaknesses. One of the weaknesses is the revenue concentration of DOMS. Wooden pencils, one of its core products, accounts for about more than 30% of revenue. Any headwinds in this segment in the form of higher competition or lower demand will have a significant impact. Second is the dependence on Fila for its business operations and R&D capabilities. Hence, any deterioration in its relationship with the international brand will impact its financial performance. Having said that, this is me, Rahul signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com